negative divergence. What it means is the momentum on the last move higher was made with a little bit less oomph, so we could look for a potential pullback or a reversal. The opposite would be true if the stock continues to go down, but the MACD line doesn't. We would call that a positive divergence, and that could be a potential bottom. The MACD is one of the most popular and widely used indicators in technical analysis. But keep in mind, of course, that no indicator works all the time. You might want to confirm with other technical tools.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
The price relative indicator is a way to judge how the stock, sector, or index you are following is performing relative to any other stock, sector, or index. While the word price is in the name, it is only important in relation to the price of the stock, sector, or index you are comparing it to. That's a key point, and one that can be confusing when traders are first using the price relative indicator. Let's look at some charts to see how this indicator works. Remember, this indicator gauges the relative performance, not the price. Here we are looking at two indices, the Dow Jones Healthcare Index, which is the green line, and the overall market as represented by the S&P 500, which is the orange line. Notice that from June till October, both indices were trending higher. We now look at the price relative line, which is the purple line in the lower pane, and we notice that it is sloped up. This means that healthcare is outperforming the overall market. If the symbol you are interested in is outperforming, you will always see that line sloped up. Now let's move over to December. As we see coming off the bottom in December, again, both indices were trending higher, but now we look at the price relative line and it is actually sloped down. This means that healthcare is now lagging the overall market. Remember, if the symbol you are interested in is underperforming the comparison stock, sector, or index, the price relative line will slope down. Let's move on to another example in the same time frame. Here we are comparing the semiconductors, the pink line, to the overall market, again, which is the orange line. Notice from November till the end of the year, while both indices were falling, we actually see with the price relative line that the semiconductors were outperforming. Then when the market turned around...
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders. Schwab, the better place for traders.
So Schwab just taught me about an iron butterfly spread.
Nice. I just tried an iron condor.
Only spread I've been introduced to is this onion chive.
It's time to trade up to Schwab, the firm invested in helping you become a better trader.
This is Trader Talk. Good morning and welcome everyone to Schwab Live Daily. Happy Friday. It's our June 12 edition of Trader Talk in today's market. I'm your host, Kevin Horner, joined as usual on this fine day by my man out in California, Mr. Lee Bull. Good morning, Lee. How are you?
Pretty good. Weekend is coming.
Thank goodness. What a difference a day makes, it feels right now, at least, right?
Right. But we shall check closer to 4 o'clock Eastern to
That's
see the
probably a
true story.
fair idea, Lee. Of course, we'll talk a little bit about what's happening this morning, what might be driving this quick bounce back. We'll get into that. Please send in comments and questions in that Q&A space beneath the presentation window. We do enjoy hearing from you. Please remember that while all of your submissions are private, we won't be able to get to every submission due to so many of you participating these days. Do want to take a quick moment to review the important disclosure detail. Just remember, our chat is informational and educational only. We're not making recommendations here. Any expression of opinion is subject to change without notice as we react to shifting market conditions. They seem to be shifting even more quickly than normal these days. We do not encourage the use of technical analysis as the only means of your research. And we will be using some ETFs to review categories, sectors, industries of the market for you here. If you're thinking about using these to invest, though, make sure you review them with a prospectus beforehand. You can get a prospectus online at schwab.com anytime, and you can give us a holler anytime because we're available every day, 24/7. All right, Lee, I'm going to bring up a heat map for you here. We noted a fair amount of green. Now, we could speculate around the, the nature of the bounce at this point. I'm certainly of the mindset that we got a little overheated yesterday on the downside, but what are the news flow in the morning telling us about today's action?
All right, let's start overseas. So we had Eurozone industrial production thanks to Eurostat data. It was April though, so it's old data, but it was pretty miserable. The biggest hit came from motor vehicle production. It was down 85% month over month from April to vis-a-vis previous month. Auto parts dropped 58%. Consumer goods even saw a decline of 6.7%. Now it'll probably bounce back, but I think what I'm hearing about this one is that the shocks were so large and it was so miserable that it may take a little bit longer than widely expected to come back. So I think the market might have gotten a little ahead of itself. Of course, we all know that the market is not the economy, but still. Speaking in Europe, their GDP contracted 20.4% in April. I'm talking about Britain. It's the largest monthly fall on record. The OECD had already warned that the UK could see one of the developed world's deepest recessions in 2020, with output plunging on the year by 11%. Domestically, we had import prices actually a little firmer than expected. They were up 1% versus the estimates of 2.6. I don't think anybody is worried about inflation, though. Also, we're getting, I haven't seen it flash, but I'm sure it's out there. We're getting the preliminary June Michigan consumer sentiment. The consensus is 75.8. I haven't seen it flash yet, but I'm sure it's out there.
I'll take a
yeah. All right. Really, that's about it. It's kind of light on data. There's a lot of stocks in the news, though.
Oh, okay. Well, you know how I feel about that. Let's get to it. All right.
All righty. So, American Airlines. Nice bounce today, but it did announce that their Q2 revenues will be down 90% year over year. Now, I think maybe that was priced in. And they also said the net bookings have been consistently positive since the first week of May. So I think maybe that's why you're getting a bounce. But this is one of those reopening trades. Got really smashed yesterday.
Yeah,
And so I think key level here, you got it right with your crosshairs, the 10-day, and yesterday's low.
I agree. Yeah,
Yeah.
I think that's pretty much your short term is what you got to look to here.
Yep. Lululemon.
Hmm.
Well, they've been on a tear, obviously. They had quarterly earnings of 22 cents a share that missed by a penny. Their revenue also came in below forecast due to the store closures. This was Lulu's first earnings miss in 3 years, although they did say that they made up some of their lost store sales with a big rise in their digital revenue, over 70%.
Hmm.
So it looks like just the pullback maybe to the 20 here, huh?
Yeah, I think that's what if you've been playing it since April, I think stops below the 20 make a lot of sense given what we're seeing here.
Yeah. Okay, Caterpillar.
Okay. Lulu Catley, that's the caterpillar, the yoga pant wearing caterpillar, right?
There you go. There you go. All right, so they were downgraded at BMO Capital to market perform. The analyst said that the financial constraints for their corporate and government customers would keep them not making quite as much money.
Found the 20 there yesterday.
Yeah,
Looks
held
like a
it.
standard pullback. I mean, it's a big move, obviously, from about 140 back down to 122. So they took a big, healthy cut, but held up pretty well here to this point.
Yep. Okay. Sony, SNE. I'm not a gamer, but they did unveil 24 new titles for its new PlayStation 5. There'll be sequels to its popular Spider-Man and Gran Turismo titles, and that new console should be ready for the holiday shopping season. They said.
Yeah, just what I needed. I'm going to be hearing about that from the boy. I'm certain of it. But I'm not. It's one of those things I don't mind giving in on too much because, I like to game a little myself and stuff. All right.
So again, it held the 10-day yesterday.
Did.
So
Yeah.
I think that's what you got to watch on that one if you're long. Adobe. So they did beat on earnings by 12 cents. The revenue was a little bit low, what Wall Street wanted to see, and they gave lighter than expected current quarter guidance. But on the other hand, it's been a really strong stock. Obviously, the 20 is what you want to watch there, the 20-day moving average.
Completely agree, Lee. Yeah, absolutely.
All right, speaking about playing games, Dave and Buster's, PLAY.
Oops. Cursor where it needs to be.
Well, it held the 22. This is one of these reopening plays.
Yep.
Up a lot today, along with a lot of these other reopening plays, trying to claw back some of yesterday's damage. They did say that they lost $1.37 versus estimates of 85 cents. They also missed on revenues, and because of obviously the closures. So this, like the airlines, they're getting this, you're getting this reopening bounce that got unwound yesterday. They're going back into it a little bit, but we'll have to see if it lasts. I don't know.
Yeah, I think it's all going to be about the, hey, you've reopened. That's great. Talk to me about the numbers. What are you seeing? How many people are you bringing in? You know, that kind of thing. Are we remotely close to what used to be normal? I'm afraid the answer is not going to be no. It's going to be no. There's no chance we're remotely close to normal. But I think that's where broadly where the market is right now, Lee, is we've worked off a lot of this now, and now we really want to see some data to support the move that we've made of late.
Yep.
All right.
Okay. Well, let's take a look at Boeing. Just for you statisticians out there, how much of yesterday's 1,800 point decline on the Dow was due to Boeing?
Well, it made a 20-point move, right?
Yeah.
So 10% move on its own. So 1,800 on the Dow. I'm gonna say 350 of it applies to Boeing.
Pretty good. 230.
I was a little over.
Little over, but yeah. All
They
right.
had a real rough day yesterday, but I'm gonna hide my resistance and support here real quick. So they didn't come to the 20. You're getting a pretty good bounce, but what's interesting today, Lee, as of yet, Lee, it hasn't taken out.
Yeah, that's the
High
key
from
level of the
yesterday.
short term. Yeah.
You got to
right
watch that. And then let me show you this one because we've been talking about that 20 EMA. Look at that. Rallied right to it, and it's kind of taking a little bit of a breather. Since it's been below it here, you can see purple line acting as resistance. So, you know, check your time frames. Find the time frame you want to trade. But there's a lot of different levels to consider here for sure.
Yep, for sure. Anyway, the news on them was they're cutting their production on the 737 MAX just 2 weeks after they started working on it.
Oh,
Yeah.
that's certainly a reason for an 11% pop back.
Yeah, exactly. So that it means the 737 MAX timeline to get back and going strong is going to be delayed. But all you're getting now is an unwind of some of the damage yesterday in these stocks that people were speculating on. I think that's what's going on. I mean, the fundamentals haven't changed since 2 days ago, either way.
Yeah, I agree.
All right, Tyson Foods, TSN. If you are worried about the virus, this isn't the best news. 23% of their employees at one of their Arkansas plant tested positive for the virus.
Not positive, no.
No. All right, we got a question on Hertz. Okay. So they're in bankruptcy, so their common stock really is worthless. But there's this, people have been saying this is one of the most widely held stocks at Robinhood, where I guess the millennials are buying it. I don't know, but theoretically the stock isn't worth anything. They're doing a very interesting thing. Usually when these stocks go into bankruptcy, like Chapter 11, they try to do debtor in possession. Right. So, the bondholders, they try to, recapitalize kind of that way. Hertz, on the other hand, is trying to sell $1 billion worth of stock. It would be new stock. I don't.
Yeah, I was gonna say, so a restructured version of who they are.
Yeah. So
can they do that through issuance of new shares, or do they have to do that with subsequent warrants or something?
I don't know exactly. And the bankruptcy judge, I don't think that's just their request. I don't know if it's going to be allowed or not. So
hey, I make a lot of requests around the house here. They don't always come through.
Yeah. Yeah, so
Interesting.
so that one is trading in such a strange manner here.
You know, Lee, we should
Way.
make mention of one thing here real quickly on Hertz is, if you're trading it, you got to be really careful because in a scenario like this, Lee, there's always the risk of a halt that never gets brought back. Is that fair? I mean,
Yes.
so if you're short this stock thinking, oh, it's just going to go to zero, well, that may be the case, but if it gets halted at 312 and then they never start trading again, you're not going to get the opportunity to close out your position. So, those types of things are risks to both the longs and the shorts. That we've seen this before where even a put holder on a stock that goes worthless, it never actually trades down to worthless. So they don't have the opportunity to trade out of their puts. So it's a very tricky situation across the board, I would suggest. I would just encourage you all to be very aware of that. And, if you feel like dabbling, make sure it's a dabble appropriate amount.
Yes, indeed. Very good advice. All right, let's go to the analysts. So analyst actions for today.
Sir.
So we just saw that European auto production was down 85%, but Goldman just put a buy on GM.
Okay. What do they see?
I don't know. I wish I could get their reports. I just get the headlines,
Yeah. All right. Well, that's really worked off a lot of that negativity.
Yeah.
Ugly candle yesterday was completely reversed thus far today, running itself to resistance here at the 10-day.
Yeah, we'll have to see if I can get through there. But I mean, if you wanted to short it for whatever reason,
Mm-hmm.
you could do it, not risking too much above the 10 for a shot at yesterday's low.
Yeah, I think so too.
Grubhub, GREB. So this one, has done real well. They were upgraded to neutral from underperform at Davidson.
Wow. Look at the 20 there.
Look at the 20-day, yeah. So follow the 20-day if you're long. You got
Also,
horizontal support there around what you were showing 60.
I agree. It's pretty interesting. Yeah, they're doing pretty well. I mean, they're all over the place. Definitely see those bags in the neighborhood frequently.
Yep. All right, we've got Southwest. So we talked about American Airlines. Let's look at Southwest. One, up on the reopening play. Two, though, got upgraded to an outperform at Credit Suisse. And some of the commentary there was they have one of the strongest balance sheets of all the airline companies.
Yeah, running right into the 10-day again.
Yep.
There'll be a lot of 10-day resistance testing today, I think, Lee.
Yeah, it'd be very interesting to see in the afternoon if they fade this bounce or not.
Mm-hmm.
I do have a little bit of data that I'm going to talk about in charting the market, which would suggest a little bit more weakness in the short term, but we'll talk about that then. All right, we talked about Caterpillar, we talked about Grubhub. Couple of analyst calls on Tesla from Goldman and Morgan Stanley.
Okay. Got a lot
All right.
on this chart.
Yeah, so Goldman, mostly on price, I think, downgraded from a buy to a neutral. And Morgan Stanley, actually, they never say sell, but they made it an underweight.
Okay, it could be a 10-day retreat here, Lee.
Yeah.
That would it did broke out with some good amount of move and volume. It looked good. You got an RSI confirmation when it did. So you know, if it obviously the first place I think that many traders are going to eyeball is that 10-day, because it did break out of this little consolidation it had been in here, and then in the consolidation subsequently held the 10, and I think that's why you're going to keep a close eye on it. The funny thing is, Lee, that 10-day is a ways away. We are at 963. The 10-day is 40 points away at about 926.
Yeah, so it's like what, 4.5%.
Yeah. So be aware of that. That was, yeah, you can see it didn't get to the pivot on the, so in the open, it opened at prior all-time highs, kind of give you a little bit of a test. And then it rallied into the pivot, failed the pivot. So you know, keep an eye on this range here today, obviously. Moves below the S1 could call into question that 10-day that we were talking about.
Yeah, we got a question also. Is there a place to see upgrades and downgrades for the day? Yeah, you can go to the news function, the Street Smart Edge, and go to briefing.com and you'll see them.
Yeah, right here, everybody.
And you can go to In Play, you can go to Story Stocks.
Yeah, these are the ones you guys are probably all quite familiar with. So it's a good way of doing things for sure.
Yeah, so that's probably the easiest way, unless you want to pay another service, but it's free.
Yeah, well, you could also come in here and use some keywords and drop an upgrade, downgrade note in there first thing when you log on, if you're in there in the first thing in the morning.
Right.
Not a bad idea too.
All right. Snap, another popular stock. It's been on a tear. Recap.
Yeah, holding its 10-day
right now. So they were reiterated as a buy at Jefferies. Also from Jefferies in the oil patch, ConocoPhillips. You're doing what I do.
I did the same thing.
Yeah, I usually do that.
There we go, Lee.
Yeah. What a bounce from yesterday.
God, that candle yesterday is disgusting.
Yeah.
Just don't like to see those.
No. Let's see, you know, is it going to fail here at the 20? It's back down below it. We'll have to see. Anyway, they were reiterated a buy at Jefferies. And then the last one we'll talk about, an IBD favorite here, Vertex, VRTX.
Hanging into the 50.
Yeah, you know, if you like this one.
This is exactly the move you would expect to get on a nice retracement like that, Lee.
Yes. Okay, so go ahead and the news is they were reiterated outperform at Vertex. And now we have also another question. I love questions that I actually know the answer to. So
sure.
And you know this one too, Gab. So show them on Schwab.com where you can find ETFs that own Tesla.
All right, so really easy way to do this, everybody. You just take your symbol into the chart, right-click in your chart, go to research on Schwab.com, and of course, it's going to take you right into the Tesla page. So here, you're going to find a wealth of knowledge and information, data, historical balance sheet information, and so forth. But if we just scroll down, we can take a quick, we can take this is what we're looking for, everybody. ETFs holding this company. And these are the ones that you can look to that are maintaining it. This is what I really think makes the most sense to monitor, is the percentage of the fund applied to that stock. So really easy way to do that. Thanks for the question there, Phil. It's an easy way to reverse engineer it. By the way, there's also some tools in here you should all check out. You know, you can, if you have stocks that you don't want to be held in an ETF, you can do some ETF screens and eliminate individual securities from those screens. So there's a lot of work you can be doing in the Schwab.com pages to get that work accomplished. All right. And then finally, we should also point out, as my buddy Chris is reminding me, we do have Making the Most of Schwab.com as one of our segments upcoming. So as always, we're trying to give you guys enough to keep you busy on a Friday. So check that calendar down below. I think that's our next segment, as it turns out.
All right, Kev, I'll turn it over to you for your
Great.
patented index analysis.
Well, then let's take a look at the S&P, which is already giving me another ugly candle today all of a sudden. So the big move yesterday, obviously, is the move in the retreat to the 200-day. We did on close break the 20, and you'll notice that we have recaptured it. Some would call this a relief bounce, given the nature of yesterday's sell-off. You are getting a good move to the upside, but the key is that obviously we haven't taken out any major levels. And so when you're looking at the chart and you see how extended the move was yesterday, I think the best thing to do here is to move in to some intra-period charts and look for some areas of resistance where we might find the market pulling back a little bit. Now, before we do that, one thing I wanted to point out is that we got an appropriate retreat on the RSI. And so everything to this point looks okay, but that doesn't mean we can't get some more pressure as we start to maybe fail against some of those resistance areas. So you'll note we had a really nice open. We did not gap R1. So we're going to continue to look at the pivot at 3041 as our equilibrium for the day. And the fact is we kind of failed up there at resistance, at least initially. And you can see we're breathing a little bit. Now, as Lee and I have been talking about the 20 EMA on the 5-minute chart, it has been a pretty interesting way to manage risk on a short-term basis. Yesterday, as you can see, it didn't come close to getting above it. And then when it got up towards it, it just kind of continued its downtrend. So the 20 EMA could provide an area of short-run support on today's trading range, but it's entirely possible that we see the pivot here at 3041.
The thing,
Go ahead. I was just going to ask if there was anything that you noted.
yeah, I notice now that we are not holding the gap right now.
And that's obviously not ideal. You have you gapped higher, you don't want to see moves below your open in this case, right? So yeah, it does not foreshadow the exact, inverse action that we got from yesterday, unfortunately. So I'm a little timid here myself, Lee. I wanted to look at this also in the 60-minute bars and see. All right, so let's put a little time on this. What have I done here? Looks like I've got a Fibonacci in there, but I don't know why necessarily. So let's just eliminate them. So look at that tail up there, Lee.
Yeah.
Yeah, so you could say, yeah, random resistance right here, right?
Yeah, you and I were talking, we also talk about the markets with ourselves, not just with you guys. And we were talking yesterday afternoon that what we would have rather seen today would have been a gap lower and then bought. And what we didn't want to see as much is a gap higher that gets sold. And unfortunately, that's what we're getting right now.
At least at the moment, yeah.
At least at the moment. Yeah, so go back to the 5-minute, and the key levels are going to be the 20, for if you're day trading, watch the 20-period EMA, see if that holds in the pullback right now. If it doesn't, then you're going to test the pivot, and that could be the last place we're going to make a stand today if we're going to go higher, I think.
Yeah, I think the pivot is the line in the sand. We do not want to break below the pivot at 3040. Let's see what the low yesterday was. Just see that, yeah, if we break the pivot, it calls into question the lows from yesterday.
Yes.
And if that happens, then I think we have a greater likelihood of retreating to the 50-day, quite honestly. And,
Yeah,
and
No, go
And I
ahead.
was just going to say that we just got levels here. You know, the 50-day could be the spot where we hold up. If not, we've got horizontal support down here in the neighborhood of 2,800. So, you know, I think a lot of traders, Lee, if we get thrown back below the 200, a lot of traders are going to say, hey, we're now range bound between 28 and 3,000. What do you think?
Yeah, I think so too.
Okay.
I would also say that yeah, I mean the 200 is flat, so you know it's not quite as predictive, but a pullback to the 50, given what we've had, wouldn't be the worst. I mean, it would be painful in the short term, but I think that would get out a little of this excess. But we'll
I
see.
agree. Yeah, you have to wonder though if the 50 could even be adequate for that to shake out the excess. You know, you may have to break the 50 and test 2,800 to bring real buyers back in. That's something I'm going to keep a close eye on. I do think there's some levels here to work with. I don't have enough of a bias one way or the other. So I think the best approach is to pick those levels. And then if it does stair step lower through those levels, make sure you're taking a little off as it goes. I think that's the best approach.
Good question from Carol in Montana. Is there
Mhm.
anything problematic about being range bound? No, it gives actually uh, it actually gives a chance to correct the excesses we've had on the way up by time as opposed to price, which is uh, it's okay.
Mm-hmm.
And it also gives you the, you know, if you know, especially if you go into the summer when things are a little bit quieter, you know, if you are in a range, you can trade things like a range. You know, buy near the bottom of the range, sell near the top, short near the top, buy near the bottom,
Mm-hmm.
because you'd be trading with the trend being sideways.
Yeah, it's actually when you can find a sideways scenario like that, it becomes real. It can be one that is easily tradable for as long as that window continues. Um, so yeah, I know a lot of traders who are always looking for. I mean, I'm a trend trader, up and down trends much more so than sideways. But I know a lot of traders look for those sideways and do just what you suggested, Lee. You know, buying at support and selling at resistance.
Yeah. So Jerry from Missouri uh, noticed a lot of what are called shooting star candles. That would be a candle with a long tail at the top and close near the bottom. Yes, Jerry, that is considered to be a sign of shorter term weakness, especially if the tail was at resistance.
Mm-hmm. Yeah, like we were talking about and looking in the hour long situation here, like yesterday's final hour is not a good final hour, right? You can see that it's up here a little bit. Like, oh no, we're gonna try and work some of this off in that final. Nope, we're gonna finish at the bottom. And oh, we're gonna start hot here at resistance, right? Look at this. So the high today versus
Yeah.
this low. This low was 3,090, and today's open ran to 3,088 and completely retreated immediately. So we missed it by less than 2 points and initially pulled back. And now you can see in this hour-long bar that we are now suddenly below the low of the first hour bar. So you're starting to see a little additional weakness bleed in here.
We got a question. How can you set up the screener to not include leverage ETFs? Just put in some fundamental factor that, like PE or something. You know, they generally don't do that on ETFs. And that'll take
That's a
them out
good
of it.
call. All right, let's check out the NASDAQ here. Well, looks to be failing at the 10 daily. Fell through the 10, found the 20, bounced back into the 10, but lower than yesterday's high, and it's being sold down a little bit here. But even the RSI still looking really strong. That pullback
Yeah.
did not really do much to change trend. as you can see, because based on the 20, I think a lot of traders are going to continue to eyeball the 20-day yearly.
Yeah, I mean, you've got that, you got a support range between 9,300 and the 20 in there. You know, you're still okay on the long side, I think, as long as that 9,300 area kind of holds.
Hmm. Yeah, I think so too. 9,300 could be like a, on one of those ugly, ugly days, if you fell through the 20 and you got extreme pressure, you got down to 93.50, and then you started to see buyers coming in, and then it recaptures and holds the 20 on close. That's the kind of move that would be really instructive here. I'm not suggesting that that's what we're looking for, or that that's what is going to happen necessarily, but it would be something that I'd be okay with. When you see that kind of weakness that gets bought up at a support line, it's very instructive as to what could be coming next. All right, Lee. Our leader for a while had been doing really well, was the Russell, and it had a really rough day yesterday. So this is having retreated the way that it did. I mean, this is a pretty healthy move. We went from 1537 down to 1350. So we've shaved 180 points. That's on the level of what, 12 to 13%, Lee? It's a pretty big number. And then you'll note, as Lee just called out, hey, you got to watch what happens at resistance. Well, today's bounce in the Russell came through and up above the 10-day and is now back below it. So that's why you're getting that huge wick at the top here. So
See, we talked about tails at resistance, and there you have one right there at the,
yeah, right on it, Lee.
at the 20.
Right to it. And so when you look at it intraday, yeah, look at how that, you think that's pretty good resistance right there, Lee. And now it's back below the pivot. That does not bode well for the small caps today.
No, unfortunately.
All
right, any sectors doing better or worse today?
Well, let's find out.
Transport.
I think, well, we can check the transports. I mean,
Why
it's
not?
gonna,
Darn.
really, darn it. This is not what I'm looking for. The only saving grace here is that it did, as of yet, maintaining the 20. Okay. But I think the only real piece of data comes in with a close above yesterday's high or movement through yesterday's low. And then you know what to be doing next.
Right. So right now it's an inside day after a big drop. You'd like to see yesterday's high taken out, but it doesn't look like that's going to happen. What are the airlines doing? Let's take a look at that. The jets.
Sure thing.
I mean, we heard the news on American.
This is that ugly candle we're talking about.
Yeah, if you think that they are ahead of themselves, you got a pretty good short sale set up right here.
Mm-hmm.
Many traders have put a stop above that 10-day with the target of the 20-day or yesterday's low.
Yeah,
You got pretty good risk to reward.
65 cents of risk, and then your reward is like $1, $1.50.
Yeah, almost.
Yeah, that's like
two,
1.5 to 1.
Yeah.
2.5 to 1. Yeah.
Yeah.
All right, let's talk about the sector action today.
Yeah.
We are being led back by, at least to this point, that is an interesting leader, materials lead.
I bet you. Let's see. Show how to go into materials in the screener and get the industry that is doing better or worse.
Sure thing. Happen to be there on performance by sectors. So this is what you're looking for, everybody, is the performance by sectors tab. You might have closed it. It's available here as well. So, oops, not those, but in one of these. Anyway, oh, here it is, sectors tool right there. So we go into materials by just clicking the arrow, and we can see
that would be. I bet you it's the precious metals miners.
Yeah, and for up today 2.25%, they are the relative outperformer over the 5-day window here.
Yeah, and there's two types of mining stocks. There's the diversified and precious metals. And I guess they're both doing well.
Yeah.
Gold and silver. Look at that.
Look at that. Precious metal. Well, that's pretty good. 27%. Steel's
Yeah.
up 26% the last 5 days.
Yeah. Well, that was you know, the big reopening rally, and then
Yeah.
Hmm.
So what's really good about this, everybody, if you keep opening this up, you say, oh, wow, steel's doing way great. Maybe I should look at that. Not to say that that's what you should be doing, but you get down to this point, everybody, and you see the individual symbols here. You can click Save as Watch List, and then you can open this up in a watch list tool as well.
yeah.
So,
Now, if you are
quick.
doing this, we're having teaching day today, I guess. If I'm looking for individual names like this, I would rather do this on the industry tab on actually Schwab.com, because sometimes you got a lot of stocks that are very low priced in this. You know, they go from bid to ask and it pushes it up. Where the sector screening is just like this on Schwab.com, but it only looks at stocks in the S&P 1500. So sometimes that can make things a little clearer. But you can do it either way. That's all.
More good insights, Lee.
Yeah.
Goodness, we've got a lot going on here. Lots of comments and questions today, too.
Well, we got a question on the VIX. Let's take a look at it. The market is up, but we're not going to get to a screen today, it looks like.
Doesn't look like it. But I'll tell
But if
you,
questions.
I'm not sure that today's the day that I want to be taking stabs left or right. So
Yeah, so the point was it has been rallying as the market has been pulling back in here.
and look at the tail it got today. So that tells me, Lee, when the S&P rallied to resistance,
They had,
a lot of hedging getting put on.
yep.
A lot of put buying up there. And note here, the most recent move, Lee, what did it do? Got right back above the EMA.
Mm-hmm.
Real quickly, did the spiders? Well. All right.
Oh, right at the pivot.
Yeah, and now below the EMA, and if that line continues to act as resistance, that's going to be a problem.
Yep.
So
If it breaks
we are
the
at a
pivot,
pretty
I think you're
interesting
gonna,
point,
and if
really.
it breaks, yes, and if it breaks that pivot, it's gonna go right to the bottom of the gap, real quick. Was that 302?
Right here.
Yeah, right there.
Yeah, 302.5.
Yeah.
Yeah, so you could see $2.50 on the spiders, and that puts you back to, you're up for the day. It's still at that point, but the other thing that I'm noting here real quickly, Lee, just if we're talking about the action and how you're evaluating it today, the volume is increasing as the selling is coming in. Notice how, let me hide my volume. Notice how the blue line has started to pull away, much like it did here yesterday when the volume increased as the selling picked up.
Yep.
It's pretty much the opposite of what we want to be seeing, of course.
Yeah. So
Yeah.
be careful out there today if you want to go long.
Today's is a tricky day for sure. All right, Lee, you have some data points coming here for charting the markets a little later, so we'll tease that out. Later today, 1 p.m. Eastern, Lee returns for charting the markets. You are joined today by Mike Bruskoff. Is that right?
That's right, my fellow
Excellent.
CMT in the Big Apple.
Mike's fun. He's a great dude. I love having him on too. But up next, we have Make the Most Out of Schwab.com. That's with our regional investment strategists, Mark Idam and Robert Kamek. So stick around for that. Also, a little later today at 2 p.m. Eastern, we have a new Modern Wealth Strategies segment, which covers the importance of having a liquidity strategy. This is, if you've been looking for reasons to be liquid, I think this existing last couple of days is plenty of reasons to have some dry powder. So that might be a good reason for your longer term viewpoints. make sure you guys are checking in on that segment as well. So it's been an interesting week to say the least, Lee, but I appreciate having you on as always. Thanks for joining me today. Everybody, have a fantastic weekend, great rest of your trading day. We'll see you all in another segment real soon.
Hi, it's Jeff Kleintop with 90 seconds of what we're watching this week. 35 years ago this past Friday, Ferris Bueller took a day off. After taking the past few months off, the global economy is back. This week, we get more May employment data following last week's better than expected news in the US, Canada, Germany, and Ireland. The job market often lags the recovery in the stock market by about a year, so the signs of stimulus and reopenings may be working is great news for Main Street, not just Wall Street. Now, the Fed isn't expected to take any action this week at its meeting on Wednesday, but bonds are finally joining stocks and reacting to the better economic news. Bond yields have finally started to climb, with a 10-year Treasury yield rising above 80 basis points for the first time since March. The move in bonds and the shift in the stock market to cyclical leadership from defensives suggests markets have gone from pricing in a long, slow recovery to a more rapid one in the past week or two. Now, data this week should continue to support that outlook. But there are risks. U.S.-China tensions remain a concern and could flare up this week at campaign events. So far, the U.S.-China Phase 1 trade deal has remained intact, as President Trump has opted for other, less economically disruptive ways to confront China. And OPEC's in the news this week with an agreement to extend the record oil production cuts for another month to the end of July. The energy sector has been the best performer since the stock market low on March 23rd. The fastest recession in history has so far turned into a pretty fast rebound, which reminds me that life moves pretty fast. If you don't stop and look around once in a while, you could miss it. Thanks for watching.
Earnings per share, or EPS, is one of the most widely used ways to gauge company profitability. To calculate, divide the company's profits by the number of outstanding shares. EPS matters because strong earnings tend to drive the price per share up, and that's good for investors. Earnings also generate money the company can reinvest in growth. But EPS has limitations. If a company uses earnings to buy back shares of its own stock, there are fewer outstanding shares in the equation. That drives the EPS up without any actual increase in earnings. EPS also doesn't consider outstanding debt, or that two companies might have the same EPS, but one company used less capital to generate the same profits, indicating it might operate more efficiently. So while EPS is a fundamental factor in assessing stock value, it's most useful when considered along with other metrics.
Hello, and welcome to the Quick Start video where we cover Screener Plus and Sectors tool available on Schwab's Street Smart Edge platform. The Screener Plus tool can help you identify securities meeting certain criteria by setting up custom screens, as well as providing a variety of predefined screens. You can find the Screener Plus tool by looking in Launch Tools and clicking on Screener Plus. Let's start with predefined screens. The predefined screens can be found along the left rail. Here you can find a variety of equity and options screens. You can find top volume, gainers and decliners, high-low for the day, performance by sectors, and many others. Click once on a screen and its results appear in the body of the window as a new tab. From there you can use actions to print or export those results, or you can click on Save as Watch List to quickly create a watch list out of the results of your screen. Click on Criteria to view the criteria used to produce the current results. Let's talk about custom screens. You can create a new screen by right-clicking on the plus sign to the right of the tabs. Here you can select from popular fundamental and technical criteria. Alternatively, you can easily edit predefined screens by going to the Criteria tab and making changes to that screen. You can name your screen and click Save Screen at the bottom to save those changes. Let's talk about the Sector tool. If you were interested in performance data for sectors, you came to the right place. Schwab has GICS, or Global Industry Classification Standard, for sectors, industry, and sub-industry. You can drill down to the sub-industry to see the individual securities and even save them to a watch list. This concludes the Quick Start Guide for Screener Plus and Sectors tool for Street Smart Edge. Please check out the Learning Center and the online help manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab and have a great day.
Thanks. Bounced a trade idea off my firm. They don't get it.
Schwab shows you indicators, proprietary research, helps you see the full picture.
Speaking of...
Trade up to Schwab. The gut check you want, the intel you need.
Pivot points are a tool that floor traders and market makers have used for decades to predict the next trading day's intraday support and resistance levels. Pivot points are calculated using the previous day's high, low, and close. You don't actually have to do the math because the trading platform will do it for you. At Schwab, the pivot point tool shows you 7 levels. First, the pivot point itself, the orange line here, consider the equilibrium point. That's the point around which the next day's trading is expected to occur. And then 6 other pivot levels, the blue lines, that's 3 resistance lines above the pivot point, R1, R2, and R3, and 3 support levels below it, named S1, S2, and S3. That gives you a lot of data that you can use to determine when to enter a trade, when to exit a trade, and where to place your stop. This data is important because all pivot levels can act as intraday support or resistance. Think about them like rungs on a ladder. A break up through any pivot level is a bullish indication and suggests there may be further upward movement to the next rung, and this signals a possible buying opportunity. On the other hand, if the stock falls through any of the pivot levels, it is a bearish indication and suggests an opportunity to short the stock. You can also use pivot points to set short-term targets for your trades. Let's look at an example. As soon as the stock breaks through the pivot point to the upside, you might buy with a potential first target at R1. Here you might choose to sell some or let some ride until the next target, which could be R2. Similarly, if a stock drops down below the pivot, you might consider setting a downside target of S1. If it stays there and then drops further, you could reshort it with the target of S2. So remember, a break through any pivot level can indicate an opportunity. If the stock or index has been rising and then starts to reverse, you can short the same stock or index you were previously long. Besides setting targets, pivot points can help you manage your risk by indicating where to set appropriate stop losses. For example, if you buy a stock because it broke through a pivot level, you might consider placing your initial stop under that pivot level to limit downside losses in case the stock reverses. If it continues rising and goes up to the next level, you could raise your stop to below that next level to attempt to lock in upside gains. Similarly, if you are short a stock because it broke down through a pivot level, you might place your stop loss just above that level to limit losses in case it moves higher. But remember, there's no guarantee your stop order will be filled at or near your stop price. Pivot points are often combined with other technical indicators like moving averages and MACD to gain added confirmation. To learn more about technical indicators and how to use them, watch the other videos in this series and subscribe to our YouTube channel.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders. Schwab, the better place for traders.
Controlling risk is a major component of any trading strategy. Bracket orders can help you automate risk management and reduce your emotional involvement. When you use brackets as part of your opening trade in Schwab's Street Smart Edge platform, you can place a limit order for a stock at a price you set and then bracket your exit strategy immediately upon execution. You can simultaneously help protect the downside with a stop order and position yourself to capture upside gains with a profit limit order. And this is a big difference from traditional orders where you'd have to wait for your limit order to execute and then place either a sell stop or a profit limit order, but not both. Brackets are contingent, so only one end of your exit strategy can execute. This allows you to place both a profit limit order and a stop order at the same time. Any trader who's forgotten to set a stop order after buying stock will quickly recognize how helpful brackets can be. They can allow you to walk away from your trades with your emotions in check. You've analyzed and put your trade in motion. You don't have to monitor it. You can just stick to your plan. It's important to keep in mind that while bracketing helps with risk management, stop orders will not protect you from a gap in prices during market hours or from one regular session to the next. To start a new position with a bracket, a trader needs to first establish profit and loss targets. While some traders will analyze a chart to set these price levels, it can be effective to simplify the process and exit based on a specific dollar or percentage amount instead. Let's look at an example of a primary order to buy incorporating brackets. A stock is currently trading near $53, but has been trading in a range between $52 and $58. Working with this range provides some parameters for a bracket order. You could place a buy limit order below the last trade, say 52, and set a stop order at 51 to attempt to limit your loss to $1 per share should the price move lower. At the same time, you can place a profit limit order at the top end of the range, $58, which the stock has recently hit twice before retreating. Remember, you can use bracket orders with a short sale as well. Brackets can also be added to an existing position at any time. Some traders like to add brackets to equal portions of a position at various prices. This laddered approach to exiting can help to protect your capital as markets move against you or boost your profit if things move in your favor. Another key benefit to brackets is that they don't expire. A traditional stop limit, or limit sell order set as good till canceled is only good for a maximum of 60 calendar days. But a bracket order remains open until your price is met or you cancel it. So to summarize, bracket orders are just one more risk management tool that can help you preserve your trade capital. They let you set predefined price triggers for your stop loss or profit-taking exits, and they offer flexibility. You can place them along with a limit order or on an existing position. And they're automated, so you aren't tethered to your screen. When you include brackets with your limit entry order, your entry and exit orders are queued up and ready to be activated. To learn more, watch the other videos in this series and subscribe to our YouTube channel.